This is Aaron Levine, LG Insurance, with another episode of the And Insurance podcast. I have Dan Danizik and Dan Kole from Square One Credit Management with us here today. We want to just talk about how credit affects us as human beings, as consumers of things, whether it be insurance or homes or cars or anything else in between. I thought it was a good topic to kind of provide some tips to our viewers, to our business owners, to our, car insurance clients, our home insurance clients, of how they might be able to better their credit and then ultimately save more money in the future. So Dan and Dan, you make life easy with your names. Thanks for joining me today.
Thanks for having us, Aaron.
Thanks for having us. Dan Kole, tell me a little bit about the business and what your role is. And
Square One Credit Management. Credit repair. I should say we're not a credit repair company. We're a credit management company. We basically educate the consumer with literacy to move forward for financial freedom. We're going to repair their credit, get their credit scores higher for whatever they're doing, whether they're purchasing a home, getting a loan. They're just cleaning up their record, basically.
So you're going to tell me to stop spending so much money and running up the credit cards.
Debt is huge.
And all that. You looked that up before you came here, didn't you?
My primary role with the company is I work strictly with affiliates. Affiliates meaning the loan officers. Any company out there that is running credit reports for their customers that they're going to utilize their credit for borrowing. I'm going to repair their credit and get them back to their desk within a 90-day period of time, within that 90 days with a higher credit score.
So what do you do? So for 90 days seems like a short window when your credit history is, my credit history is 34 years old, according to my credit report. Is 90 days enough time, or is that realistic? Do you need more time, or is there errors on those reports that you can really pick up and get things moving?
We pride ourselves in a 90-day program, but that doesn't mean that's all we have, right? So budget, goal, and timeline is how we differentiate ourselves through the client's needs. But instead of talking about just our 90-day program, I think the most important facet about our particular program is if we can't truly help you raise your credit score and educate you through the process, we don't take you on. And that is a game changer. So now I've said this
consult without charging a fee.
Correct. Number one, we always consult without charging a fee. Then we give a financial evaluation based on somebody's credit report, right? Everybody's different. Snowflakes. All snowflakes are different. All credit reports supposedly are different, right? I've been in the business for 23 years.
How many credit reports have you seen?
One or two. 25,000, 30,000 probably, maybe more.
Okay.
A lot. And what people don't know, or consumers don't know, business owners don't know, is credit's ever changing, right? So a big tip was back in 2010, you can have a credit card and have a 50% utilization on it, right? So you have a $10,000 limit. You spend $5,000 or less, or $4,099, and it has no implication to credit scores whatsoever. In 2011, that law changed, or not a law, the guideline changed to 30%. So we shrunk 20% off of that. So now it's $3,000 and people are still overspending, right? So when you get to 75% of your balance on a credit card, you're considered maxed out. So we have to keep our eyes on that, right? What's worse in that situation is payment history and things of that nature, right? You got a late payment, God forbid you get a collection, a charge off, a judgment, a profit and loss. Well, first of all, that stuff needs to be verified. Who says? The credit bureaus? 80% of credit reports have a mistake. So we're going to take nothing against the credit bureaus. I'd particularly like it if they manage to maintain my consumer's credit better, right? But they don't. They're busy, whatever the excuse may be.
Keep you in a job too.
Yeah. Our first job, Aaron, it's funny. My first job is in credit repair. My first job is, let me ask you a question. How much did you learn in high school about credit? Yeah. How much did you learn you could have went to Harvard or Brookdale. You don't get credit literacy. Why? Not here to talk about.
I got a beach towel, I think, when I got my first credit
card. Did you? And a piece of paper. You hung it up on your wall.
And then you went to your dorm room.
I was a freshman in college. Had
Day
a good
one.
fake ID. Show up to the Syracuse game. Hey, we're giving away beach towels and beach balls if you want to get a credit card. And you're like, sure, you sign up. What's your income? I don't know. 100,000. I'm 18 years old.
Yeah, sure.
Sure. Nobody's verifying.
No verification of anything.
Like, shots on me.
So they used to have those kiosks. They used to have those kiosks, right? Like sign up here. You'd be going to a bar. You need a new pair of Nikes, whatever you're going to buy. And then you'd forget you have to actually pay that bill. And you'd go out of college not with an abundant amount of student loans, but you also go out with an abundant amount of credit card debt and a 480 credit score, which is not good. It's a triple F rated score. So we really have to get, right, the education and the literacy out there first, right? Because you can repair somebody's credit. Right. But what happens in 6 months and they're still making the same mistakes? Right? You're an insurance guy. You get a ticket. We hope they don't get another speeding ticket.
We all make the same mistakes. We just hope to do them a little bit differently.
You do, but if you arm them with a little bit of payment history.
And it shouldn't live with you forever.
Right.
So here's a crazy thing about that. Can I touch on that for a second?
Yeah.
If you get a judgment filed on your credit, do you know how long that stays on your credit in the state of New Jersey?
No.
20 years. If you pay it, you get 10 years off. So they take a decade off. They shave it right in half for you.
That's crazy.
But it's still on your credit report for 10 years. And the first 3 to 5 years, it's going to have, so it's like 100-pound weight attached, lead weight attached to your ankle. You're going to walk anywhere? I'm not. That's the same thing with your credit. It's just holding you back from growth. You're going to finance a car. You're going to lease a car. You're going to get an apartment. Hey, you're going to apply for a job? Because credit now, right? Job applications want to know what your credit score is. Car insurance. Right? Personal loans, student loans, $1.7 trillion in student loan debt, right? I've seen credit reports with carrying an 11% interest rate on student loans. The national average is 5.5%. It isn't affordable. And that's that's where the literacy, the education, the consulting, the coaching, right? To clients to hopefully light a spark between them. Because here, I love banks. I love lenders. I didn't always like that. And we need them.
Right.
But we don't need them at subprime interest rates because it's unaffordable.
I looked at, one of my employees had a car loan once upon a time, and I looked at this loan, looked at the value of the car. I'm like, this loan can't be paid off.
It's depreciation.
Between the depreciation, but the interest rates and the way that it was compounding, and I'm like, it was some kind of fake hard money type loan. Yeah. But I'm like,
you're seeing a lot of the dealerships do it.
You can't pay this back.
You can't.
There's no possible way for you, unless you pay it in full, you will be paying on this car until that car is 40 years old.
We deal with dealerships. I actually deal with some local dealerships. A gentleman, a salesperson came to me the other day and gave me this woman's name and number. He's like, please call her. He goes, we were going to charge her 27% interest. He goes, day one, I couldn't do it. I passed it. I told her, come back in 90 days. Let Square One help you out. Come back in the 90 days or 120 or 6 months, whatever it takes.
Is that the Ford dealer?
Yeah.
Yeah.
But please don't buy the car today. And she didn't. And she called us and we're working on it.
And then you look at that, so you're helping her with her credit with respect to buying a car. And then that credit increase is also going to affect her when she goes to purchase that auto insurance also.
Definitely. Yes.
Absolutely.
So there's legislation in New Jersey right now. There's a bill. It's an S-111. It's related to rating factors for home and auto insurance. And there are states in the country that have passed such similar legislation. Washington State is one, where credit, sex, education, and occupation cannot affect your
college education,
your automobile insurance rates. So I had an insurance company call me, one of my better carriers. We're not going to mention names. For them, we'll protect the innocent here, but we took a sample of my book of business and looked at the overall cost increase. It not only will, the people with better credit get a rate increase, the people with poor credit were also getting an increase. The way that it looked, the way that it's broken down, the way that the math works, and the way
no matter what, there was an increase.
No matter what, there was an increase across the board. Yeah. It's a scary thing to look at. So what can we do? What are the most simple things that somebody can do if they're having some credit issues? We're in a time where money is tight.
Yeah,
there's a high level of unemployment. Things are different. Childcare has changed. So what are some of the simple things people can do besides paying down their debt? Like, obviously that's the easiest thing to, in theory, it sounds easy, but I like to go buy cars. What can people do to help themselves?
In the state of New Jersey where we live, in the tri-state area, it's difficult, right? You mentioned unemployment. There's a lot of stimulus money. There's a lot of unemployment money coming into the market. The best thing you could do is drive down your smallest credit card payment and pay it off and leave it at zero, because payment history counts as 35% of your score, right? So just that little habit, pay the card off, leave it at zero, fight tooth and nail to keep it at zero. Use it every month. Buy the wife dinner. buy the kids whatever they need for sports, but then immediately pay it. If you get too far gone and the economics are not making sense, right? Your financial situation, W-2, or you're self-employed and you got employees, and then robbing Paul to pay Peter, you got to see professional guidance. It's like anything else. People are embarrassed to talk about credit. I don't know how you grew up. My parents, I didn't know how much money they made. I barely knew what they did. It wasn't dinner discussion. Right. My kids are already at 4 years old. I have 4-year-old twins, Luke and Madeline. They're already getting very, very basic credit and disciplinary stuff because it does start there. But if you haven't,
it's like my kids know about insurance. I mean,
but that's awesome. I mean, maybe they're going to be future rock stars in the insurance agency like you.
Hope not.
But the point is here, like, you don't whisper at the water cooler, hey man, I got a 510 credit score. You're whispering about the Porsche or the BMW or whatever you bought because we're keeping up with the Kardashians. It's not keeping up with the Joneses anymore.
No longer the Joneses.
So we're all doing that. But listen, the truth in the matter is if it spirals out of control, the worst thing you can do is wait, right? A 30-day late payment turns into 60 and 90. On the 91st day of being late, the credit company, right, creditor, credit union, mortgage, whomever is reporting can legally report to you collection. And if that happens and you've lost 100 points for your lates, you're going to lose a lot more points, 50, 75, 100 more. And now we're climbing out of a big mountain. Let's keep it a hill, right? Let's strategize and structure what we can do. Some people need to get a part-time job. It's just short term though, right? Here, let me ask you a question. If you got a part-time job at Walmart making $800 a month, right, and signed on to one of our programs, right, 90 days, 6 months, whatever it is, depending on your financial situation, in 3 months, you can quit that job. And I'm literally saving you $800 a month. You don't have to go to that second job anymore.
Right.
Now, if you kept the second job, you can start nest egging, student loans for future, retirement. You want to retire? Everybody wants to retire. I hope to retire with a couple shekels in the pocket, and so should you, That's the little tidbits that I would give.
That's the education that we give, ongoing. So during our program, whether it be a 90-day program, 6-month program, 12-month program, and beyond, we're constantly educating them, sending them out emails, letting them know how to control their credit, to maintain that credit.
Yeah, personal credit coach, Dan, too, right? Yeah. So the biggest thing is, you ever call your credit card company? You ever call your bank?
Only for fraud.
Oh, right? It's 45 minutes in your time. Like, we're all employed people, and I hope all of our listeners are employed or getting employed. But the bottom line is I don't have 45 minutes to wait on hold to ask why my payment wasn't taken out and get jockeyed around 14 times from India to wherever to back to America to... That's at our company, right? We pride ourselves in having one dedicated credit coach. So Aaron, if you were our client, not with your spectacular 820 credit score or anything, but if you were theoretically our client, you get one individual.
Right.
They know you, you know us, and we know the situation together. So a 5-minute call is literally that. And it's just included. You want to call us every day? You want to email us every day? You have questions every day?
And we do get calls.
Bring it on.
From the same people.
Bring it on.
Which is
But
fine.
it's great rapport and it's great client services for somebody to get in the phone, get off the phone. Because the truth of the matter is, man, my guys work 8 to 7, my team, depending on what field they're in. But the collection agencies are 9 to 5. They're not open on weekends. Right. When are you going to tackle these problems? So it's a service like anything else.
All right. So you get a call from a loan officer. Loan officer gets a call from a prospective buyer of a home. Mm-hmm. Hey, just put in a contract on this house.
Yep.
How's that conversation go?
Well, what's their credit score?
What's their credit score? That's the number one question.
I wish
they're
loan office...
calling you, so therefore we know what their credit score is.
Basically, we'll take a look at their credit report with that client, go over it with a fine-tooth comb, explain to them where their deficiencies are in their credit report.
Yeah.
Why are they there? Fact find from them. Let them tell us, where something went wrong.
Right.
We will then put a program together. Well, every specific credit report is different.
Yeah.
Every program that we have is different.
Every financial situation is different.
It's geared to that client. What is their time horizon? Okay. When are they purchasing that home? We already know what their goal is. Their goal is to purchase that home. Their goal is to fix their credit. Yep. The third and most important, what is their budget? Okay, we'll go over their budget. We'll cater to their needs and their budget.
What's their debt amount, right? So if they have collections, how much debt are they carrying, right? So, problem, you selling the problem or the solution? We discuss the problem, right? To come up with a strategic solution, either short-term, mid-term, or we need to extend it out. Because D do nothing all, right? Short-term, mid-term, Long-term 3, D, do nothing at all. Stay as is. What's going to change? So a year from now, you're 580, you're close to qualifying at 620, which is what my mortgage brokers tell. I'm not licensed to speak about mortgages, but we work with lots of guys that say 620 is the ground floor. So you're 40 points away. Our average client sees 65 to 70 points on 2020's number, right? Our average client saves between $800 and $1,200 per month when they're done with us. So the loan officer loves it, right?
That's a wild amount of money.
Loan officer gets something out of it, right? They get to help another family get a home. The client, the number one person in the whole equation is the client. They have a fulfilling need to buy a home. They want a better school system. They want the white picket fence and the dog, right? We get them that. So everybody prospers in that. Capitalism in America still exists, right? The American dream of buying a home is real. But make sure you prepare yourself. Let me ask you, even if you could buy a home at 580, like 2005, remember the Wild West? Here's my 3rd grade report card. I need $750,000. Really?
Put a mirror underneath your nose and see if you have breathing.
Okay, no Doc. Again, I'm not here to discuss any of that.
Thank you, Countrywide.
Yeah, thank you, Countrywide. Yeah, how's their business today? Defunct? Right. Yeah. So, but that's not here nor there. People make mistakes in life. So even banks, you know what I mean? We got a little bit over our skis, as they say. But, you know, clients that can come in and what if they're getting a 2% higher interest rate and it's $500 more a month? Yeah, you can get the home. But that $500 a month can pay for the cable, the water, the P&G bill, whatever.
Pay for everything, yeah.
Pays for lots of things.
Expenses.
That's $6,000 a year over a 360-month loan or 30-year AM. That's $180,000 in interest. So if we have a small investment to make to better your future, what's better, $1,000 or $180,000?
Listen, how many people, you know, so many people have no idea what to do, right? People are stuck in traps. They don't know the way out. But, you know, working with a professional organization like Square One helps them understand and learn and how to get themselves out of whatever situation that they're in. So let me pivot to this question. So I log into my credit card.
I knew you were going to say that. Oh, I thought you said Credit Karma.
No.
Yeah, no. We stay away from those guys. Capital One, fine. Anything but Credit Karma.
So, all right. So tell me why not Credit Karma?
Experian dropped them due to fictitious FICO scores.
That's amazing. So where did they pull their numbers from?
So they get it from TransUnion and Equifax, which is great, right? But that's 66%. Where's the other 33?
Okay.
And most car companies pull Experian. So identity theft, the fastest growing, the largest growing crime in this country day by day. That's FBI information, right? So, and most of the time, identity theft happens, unfortunately, from a close family member,
right?
Somebody living in your home or a close friend. 90% of identity theft happens that way, by the way.
We have a case working. That's something similar
It's amazing. So now a client calls us up, right? Can we talk about that for a second? They get ID theft.
Right.
They're like, I filed a dispute on my credit. There's 10 accounts. All of them stayed. Well, yeah, because that's not the first step. So you have to understand structure, right? You lay a foundation first. So we have to go through the proper channels of actually getting, because I can call Amex today and say, hey, that X, Y, and Z charge I just made, that was unnecessary. I don't want to pay for it. And they may go, okay. And they may go, well, we're gonna question 25. That wouldn't you if you own the bank? Sure. So they're going to do their due diligence, right? So it's more than just filing disputes, right? And you need your handheld. You need to file a police report. Number one, and then go through the proper channels because the bureaus are not going to relinquish that information that easily. It is painful. It is hundreds and sometimes thousands of pieces of paperwork, right? It's time consuming. Right. It's frustrating. And the number one thing I'm going to say, it's emotional, right? Sure. So you're mad at everybody. You're cussing people out. You're yelling and screaming, stomping your feet. I get it. I'm a consumer, but that's not the way to handle the credit bureaus. They're multi-billion-dollar conglomerates. Equifax, Experian, TransUnion, 3 fast food companies operating in the same space. You want to go get fries, a burger, and a shake at 3 different places? You got to pay 3 different fees. Right. And that's what it's like about the credit bureaus as well.
Listen, it's interesting. I always tout hiring professionals for anything, right? We have our lawyers to do the lawyer stuff. Absolutely. We have the accountants to do the accounting stuff. The insurance guys and the credit guys to help out with any needs there. Even from an ID theft, I didn't even think about that, bringing that up. That's huge. Like if I had an issue here, I don't know what to do if I have cards and accounts opened up in my name. Then I'm like, I have to take care of this. This sucks.
Yep. What about cell phones? Cell phones.
That's a huge issue.
You get alerts all the time. They buy $1,000 cell phone, Apple, right? In your name, right? on a fraudulent credit card. So they didn't pay anything. And then they sell it for whatever they make. Right. And they're doing that hundreds and thousands and tens of thousands of times every single day. So ID theft with our program, not to get too much into what we do, and I recommend that whether you do it, you mentioned Capital One.
Right.
They have like a site monitoring, right? Like if your credit was pulled.
Yeah, they use they call it credit-wise, right?
Credit-wise, yep.
You know, so how legit, you know, they put a number when I open the Capital One, it says, oh, your credit is blah, blah, blah.
Yep.
How accurate is their credit-wise?
Bingo. Best question you've asked so far. So that's a Vantage.
Took me a while.
I mean, you've been full of great questions. So that's funny because we deal with this every day. Like I looked at Credit Karma. First of all, we don't accept Credit Karma. It's non-compliant. But it's a Vantage. There's two separate credit scores in this country, right? It's a financial credit report. That's the easiest way I can explain it. You go to a bank or a lender for a car, a mortgage, a student loan, a personal loan. Anything you finance is going to come from it's going to have more risk. A Vantage score in my terms, right, is a synopsis of what your scores can be without any of that assumed risk or liability. Leverage, right? Put in. So you might be 720 at Credit Karma. You stroll into the mortgage guy, you're 600 on financials. Something popped up or the algorithm really hits you harder because it's judging your debt to income more or your payment history more, or you don't have a lot of credit. You're young, you're starting out. We all started out that, right? So Vantage and a financial credit report are kind of night and day. So if you're going to get something, if you want to buy a home in 3 months, right? Or you want to get car insurance, I always say, get your credit pulled first. If there's any nuances, if there's any mistakes, if there's any errors, erroneous, misleading, or otherwise, get a professional help you. Square One, I'd love to be that company.
Right.
But if it's not us, get somebody to help you.
So I had a situation recently, not myself, somebody that I know personally, applied for a car loan, had an issue with the car loan. No debt, no credit cards, lives in a $2 million condo.
That's all?
Payment free.
You couldn't get $3 million?
Right? They have more cash in the bank than they know what to do with, but his credit sucks.
Yeah.
Like, how does that whole thing work?
Well, first and foremost, I mean, the last 10 years, I don't want to get into a financial discussion, but if interest rates on a car is 1.9% and you're making 25% in the market, I don't know too many people that are going to take that money out. They're going to let that ride for a little bit longer. So OPM, other people's money, right? Borrow the bank's money at 1.9. So he doesn't care about his credit, right? Because he's got all that extra cash in the bank. He's a baller, right? He's living his lifestyle. He's having a good time. But let me ask you a question. Facebook borrowed $400 billion to the Bank of Ireland, where they kept he keeps his money at 2.5%. So if Zuckerberg is borrowing that money, isn't that some good credibility to say you and us is the smaller fish in the Pacific Ocean, right? I know I am. We probably need the bank at some point, some point or another. What if something happens catastrophic?
Right.
You need to have good credit. You ever I went to a place in Asbury Park. I'll do what you did. I won't say their name. So I collected all the money. We went after a golf outing. I collected all the money, paying for the pizza, paying for the one beer that I had. Just
now
one.
I know where it is.
Just one. Just one. And I gave them all the cash and like, we don't accept cash. And I'm dumbfounded now. You don't accept cash. So you got the credit card. What if you come there and you don't have a credit card?
Who goes anywhere without a credit card? I mean,
but who can't get one?
I'm mad at the bagel shop for only taking cash. You know, when I want to buy a $3 bagel.
I know that bagel store as well.
Most of them.
Yeah, $3.50 now. It's up now.
It's a bit rough. All right, so one more quick topic. What is business credit, right? So, you know, I've heard the term business credit. Obviously, I know my business has a credit score. But anytime I go to take a loan for the business or purchase something in the business,
they want your personal.
They want my personal. Yeah. When does my business have enough clout to just buy stuff on the business?
So Dun & Bradstreet's responsible for that. You got to get a Dunn's number. You get that. It's basically the same structure, you know, Equifax, Experian, TransUnion, but they give you a business credit score. But it's very difficult to build that up.
Okay.
So the best way to do it is call Dun & Bradstreet. And if you want to deal with them, go through the motions of really getting established.
Right.
But a lot of their establishing cards are kind of like self-bought cards. So if you have to shop at that particular store they design you to.
Right.
So you can't just go out. So, you know, your personal credit is really still when you're going to always fall back on. Why? Because it's your personal credit. It's collateralized. They want you to back your home up.
It's going to be a guarantee.
It's a guarantee.
I think I have a Dunn's number. At one point, I had to register and get one set up for one of my insurance companies at some point. But I don't know what sits back there.
Yeah.
I don't know what it looks like.
Yeah. Truth be told, I'm in the same position. I'm in the credit business, and everything that we do is securitized against my own personal credit. Okay. Now, that's my belief in myself and my business. Right. But it is dangerous, right? Because what if my business, we had COVID. So what if that pandemic struck down my business? I didn't create, I'm not from Wuhan. Okay, so I don't know where that came from, the China virus, but I don't know where that came from. So my personal business could be detrimental to that. So now I lose my personal business and I lose my home on that. Right. So there's some talk about some changing laws about that, but hey, we'll see, right?
Well, listen, the SBA gave out, how much money without really asking questions about it. So if you were a small business and wanted to borrow, the best time was last year.
Yeah, 100%.
Yep. Yeah, no questions
so
asked.
thankful for that. So thank you guys for joining me. Any other closing remarks? Any other tips, comments, needs, wants? What?
We need another hour for that.
We need another.
Maybe
hour
some tequila.
We'll be back with tequila and the Totally Local podcast with Dan and Dan from Square One Credit Management.
Thanks for having us.
Thank you guys for joining us. We appreciate the
pleasure.
tips and information.
Thank you.